Good morning, good afternoon, good evening. My name is Dave Grant. I am the founder of Retirement Matters, and today we are talking about how you can add up to $480,000 to your retirement lifetime income if you're a teacher collecting TRS and now Social Security. So before we dive into that big dollar amount, let me give you some background of why this is now becoming a reality. At the end of 2024, President Biden decided to change the Social Security code and remove two provisions that were adversely affecting public sector employees. So Illinois TRS teachers being one of them. What that did is it removed some of the provisions, two of them being the Windfall Elimination Provision, otherwise known as WEP, or the Government Pension Offset called GPO, which affected how much in Social Security benefits teachers could either claim on their own benefit or claim on their spouse or surviving spouse, deceased spouse, or divorced spouse. Any of those things, they were eliminated or reduced by the fact that you're collecting a teacher's pension in Illinois. So now these provisions are all gone. That means that teachers can now claim either their own Social Security benefit if they've earned it while also teaching or earning it after they were a teacher or before a teacher. They can now collect that full benefit, or they can collect a benefit based on their spouse or divorced spouse or a number of different scenarios with someone that they are married or were married to. Let's go through the financial benefits of these, giving you some numbers and helping you understand how this actually plays out. So let's talk about Mary. She is a retired teacher. She retired after 30 years as a public school teacher in Illinois. Now, if you're in Illinois, you know that teachers don't pay into Social Security. While they're teaching, they just pay to the TRS retirement system. She gets a pension of $7,500 a month from TRS. Now, before Mary was a teacher, she worked for 10 years in the private sector, starting from a very young age, the age of 15. And while she was doing that, all the way up through she was 25, she was able to earn enough credits to qualify for Social Security benefits. But when she looked at her Social Security statement, she was seeing that she was able to claim $1,500 per month in her Social Security benefit. Now, under the old laws of WEP, that $1,500 benefit was cut to $926. So over a year, that's a reduction of $6,888 if we're getting specific. Now, if Mary lives 20 years into retirement, she would have forfeited $137,000, a little bit over that, due to that WEP provision. So that benefit that she got for herself, she wouldn't have been able to claim. Now that has changed. That $137,000 is now in her pocket, and she's able to invest it, spend it, give it away, do whatever she wants. Let's look at a second case study. And this one is not looking at WEP, it's looking at the Government Pension Offset, or GPO, for spousal benefits. So let's look at John. He retired after 30 years as a teacher in Illinois. He's going to get a $6,000 per month benefit from TRS. John's spouse works in the private sector. They qualify for Social Security benefits, and under the normal circumstances, John's entitled to a spousal benefit of $2,000 a month. Typically how that works is it's a 50% of his spouse's benefit is the maximum he can receive. So if the spouse receives $4,000, he can receive $2,000. Now under GPO, the system that used to exist, John's spousal benefit is going to be reduced by 2/3 of his state pension. Now 2/3 of his $6,000 pension is $4,000, and that's going to be subtracted from his spousal benefit. So if you subtract $4,000 from $2,000, that benefit's going to be completely gone. So over a year, that reduction, he's going to be losing out on $24,000. If he lived 20 years in retirement, he forfeits $480,000 due to the government pension offset. So how do these situations change? So Mary, her $1,500 is going to be reduced. Now she's going to get that full $1,500. John, his $2,000 spousal benefit was going to be eliminated. Now he can collect that $2,000 because all those provisions have been wiped out. Now, one thing that's interesting is this can add a lot of income into a teacher's retirement situation. So like we just saw with John, this could add $2,000 a month into his situation, whereas his spouse was already claiming $4,000 a month and he was getting $6,000 a month from his pension. So their income went from $10,000 to $12,000 a month by not doing anything different. But that can dramatically change your retirement. And when you're looking at $12,000 a month, for someone who might not need that, that then starts to get the wheels churning of, well, what are we going to do with this money? Like, are we going to invest it for our heirs? Are we going to give this money away? Are we going to do some more fun things as a retirement? And that's where the planning aspect of financial planning really kicks into gear. And you have to make sure you're doing this in the best way possible. Like I mentioned in a previous video, Social Security is taxable once you get over a certain limit on your tax return. So you have to understand, okay, yes, I'm getting this $2,000 a month, but how much of this is now going to be taxable because I'm earning over a certain amount? That comes in different forms. If you're getting a pension, sometimes that is taxable at a federal level, sometimes it might not be. You're going to have to understand how this all plays together. And if you don't, that's where people like me come into play and we can give you all the answers. So if you've got questions about how your Social Security claiming situation is changing, how your tax situation might change, or from a big picture, how your financial plan might change with all this extra income, feel free to reach out. We can have a conversation and we can make sure you understand everything.
Dave Grant is the founder of Retirement Matters, a wealth management firm in Barrington, Illinois. Dave specializes in helping people transition into retirement, specifically executives at AbbVie and Illinois teachers in the TRS pension system. If you have concerns about your retirement transition and want help from a fee-only advisor with decades of experience helping people like you can learn more at www.retirementmatters.co.